An important signal still hasn't fired for Bitcoin today, and many people believe that Bitcoin has already bottomed. In this update, we have to discuss what exactly this signal is, why it's important, and when we can expect it might fire. We will see a new monthly Bitcoin analysis today for August and a review of last month's Bitcoin analysis. We will discuss one concerning signal that conflicts and another that agrees. The macro outlook, important levels of support, and possible timing for the new Bitcoin bull market. Before we get into it, if you're new to the channel, subscribe and spank up that like button over 9,000. In every single bear market that Bitcoin has ever had, even in the early days, this indicator has marked the exact bottom. If you had bought Bitcoin when this indicator was red below its trigger line, you would have scored the cheapest Bitcoin in the entire cycle. In this update, we will discuss when this indicator is likely to fire and give its signal, giving us the opportunity to purchase Bitcoin at the cheapest possible price. Now, there are a lot of people around these days that think that Bitcoin has already bottomed. And it's true, we are getting a lot of early signals firing for maybe being in the vicinity of a Bitcoin bottom. Signals like this power law corridor here. We can see that Bitcoin is below the bottom line in the green there. But you got to be careful when dealing with signals like this, because I don't know if anybody remembers 2022, but a lot of people thought that this log channel would provide support. But instead, Bitcoin just went right below it, and we lost the indicator. It became invalid. Can't use it anymore. So, when we're dealing with signals like this in the market, when we're starting to approach a bottom, we need to coordinate with other signals. Signals like the one I'm going to show you next. Along with many other important indicators in the market, this average true range ratio, a ratio of short to long average true range calculations throughout Bitcoin's history, is showing that we haven't seen it cross down below or touch its trigger line yet, or give a durable break back up above its moving average. After doing that, it hasn't given its signal yet. We haven't even touched the trigger line. And there are a lot of other signals out there floating around that are also like this. So there is still quite a lot of wiggle room for a lower bottom to form in Bitcoin. Many of the ones that have already triggered actually can stay low for an extended period of time and maybe aren't the most precise. However, we do need a reason to think that Bitcoin will move lower. And that is what we're going to look at next. Now, if we look at the central bank policies around the world, we can see that most of the central banks in the world that are at all important have either paused or have begun to raise their interest rates. We have New Zealand here, completely flatlining. We have the Swiss central bank flatlining. Australia is hiking their rates. Canada is flatlining, doing nothing. China also doing nothing. Great Britain is flat as a pancake. Same with Japan. Same with the European Union. And the United States Central Bank is also flatlining. So generally, we see an environment where it looks an awful lot like the central banks are done cutting rates and are very likely at some point to start raising them. Now, what I'm going to show you next puts a new light on that and makes it quite a bit more credible of a scenario. Now, having a look at the interest rate futures market and the bond market, we can use the bonds and the futures to create a term structure graph that projects what the market thinks the interest rates are going to look like in the near term and less credibly out into the longer term. And all of the futures and the bonds are pointing to the idea that the central bank is going to raise interest rates, probably up to about 4% plus percent in the fairly near future. Now, this is going to have an effect on liquidity, which is exactly what I'm going to talk about next. This is the inverted DXY chart. DXY is the US dollar index, and it is the strength of the US dollar weighted against a basket of foreign currencies. Now, when you invert it, it correlates with Bitcoin quite a bit, and sort of like liquidity, it has a little bit of a lead to it of about, say, 3 months, something like that. Now, when the price of this particular chart moves down, it means that the dollar is strengthening. And so, because of the interest rates we just discussed, we'll likely see the dollar continue to strengthen. And that is going to put additional downward pressure on the Bitcoin price going into the next few months. And if we're saying it's going down in the future, over the course of the next few months, we probably want to be a little bit more precise about the timing, and that's what we're going to talk about next. This is the Bitcoin date range trend chart. Tops to tops, bottoms to bottoms, halvings to tops, halvings to bottoms. Every combination is covered, and all these combinations are converted to lengths, and those lengths are used to make projections for the next event. I've used the lengths that are already available to project the bottom according to the 4-year cycle, and it falls sometime in the middle of October or early November. That's where the cluster of most of the projections lie. I think the earliest one is September 26th, and the latest is in the first half of November. The middle, where most of the projections lie, is sometime towards the back half of October. And that is when the 4-year cycle projects that we're likely to see the signal fire. And so, according to the 4-year cycle date range trend chart, that's where you should expect, and everyone should expect, that Bitcoin will bottom. Now, there is actually a fairly good reason why you would expect that Bitcoin would continue to obey the 4-year cycle. And that is a combination of the cycles in the macro environment and the cycles that are endemic to Bitcoin. As little as people want to admit it, the halving does actually still matter, and it has a great deal to do with the supply dynamics of Bitcoin. Now, of course, we're going to have to see liquidity pull back up and perhaps the dollar weaken a little bit, and we're going to have to look for those macro confirmation signals that is what's going on. But right now, we're on track to continue with what most people should expect Bitcoin to do, which is what it does every time. And in the next chart, I will review some good reasons as to believe where it will likely go. Where is this bottom for Bitcoin? Well, we should have a look at the next chart. Before I talk about this chart, I would like to credit another creator, Wolves of Crypto, for coming up with the half-angle chart, which is where I got the idea for this rendition. But this chart effectively follows the progression of Bitcoin from tops to bottoms, and it halves the angle of ascension every time. You should go visit Wolves of Crypto's channel. His material is excellent. I personally have the attitude of gotta catch 'em all for creators about Bitcoin. But anyway, this pattern says that in confirmation with the 4-year cycle, if we were to make that projection, that it would be November 9th, according to this. And if we have a look at Bitcoin's rate of descent, it does appear to be following this blue line straight down here towards this exact support level, right here in the mid to low 40s, centered around 44. I think the lowest point here down by the blue line is 42. So, at least according to this, it's very likely that the bottom that we're going to see for Bitcoin is going to be in the back half of October or maybe early November, and it'll be somewhere around 43, 42, 44, somewhere in that sort of low 40s area is where we're headed. Now, this also coincides with a lot of other valuation indicators that I also follow. So it is actually validated in multiple different ways. I won't show those this time just for brevity, but it is quite likely that we're going to see something like this happen in the not so far-flung future. We'll see Bitcoin in the 40s in the autumn. And that is why I think it is premature for investors who intend to buy Bitcoin or invest in Bitcoin to be putting their money directly into Bitcoin right now, because I think that we're going to be seeing a better opportunity to be buying Bitcoin later this year when this signal fires. Now, I said I was going to tell you what this was. This is called short-term holder NUPL, or net unrealized profit loss. It is a reliable signal. And I think that we're going to see that this autumn. I do. I think we're going to see this signal fire in the autumn, and it'll give us an opportunity to buy Bitcoin really cheap. And I think that people that are putting their money into Bitcoin right now are going to be regretful that they didn't wait a little bit longer and were premature because they were afraid that they would miss the bull run. But I don't think that they will miss the bull run. I think that they'll miss a chance to profit maximally from the bull run, which is what I want to do. But what is Bitcoin going to be doing in the shorter term, you ask? Well, lucky you, because a forecast is coming up next. Last month, the technical indicators were bearish with some conflicting signals, but derivatives traders had accumulated a lot of shorts above the price, and liquidity, like the euro here, was pointed upwards, and I didn't give them the weight and the prediction that they deserved. We have to remember here that liquidity and derivatives are the 1,000-pound gorilla. On the hourly chart, we can see that we're stuck in this descending channel here between these two descending trend lines. Looking at the harmonic forecast, it says that we're done with this move and we're likely to move down towards the bottom of the channel. This is supported by the overheated stochastic RSI here, which is way overbought, and a compression is currently forming on the BBW, which says that we're likely to have enough energy to move down. However, we see that these two moving averages are still not crossing. We're still stuck with this little pocket here between the 20 and the 50 moving average, and we're going to want to see the 20 cross back down below the 50 before we can really move down in a serious way, which gives us the idea that we're likely to maybe delay any larger moves until later. On the daily chart here, we can see that stablecoin supply is still in steep descent. We do need to see this pull up as we have seen close to the end of every bear market, every previous cycle, before we can be sure that liquidity is moving back into the crypto ecosystem through stablecoins. In the macro environment, we see that liquidity generally is drying up as well. The euro here is in descent over the course of the next several weeks, and we can see it forming what looks like a double bottom area here in October, which is sort of consistent with what we would have expected. We see these long descending wedges and this potential double bottom here forming on the chart. I think in the short run, these are going to be invalidated, possibly morph into a different pattern, and then feed into our spring out of the bear market into 2027. Looking at the funding rates, we see the funding rates are very positive, which is bearish for Bitcoin's price and means that there are a lot of derivatives traders with long positions piling up below the price, providing impetus for market makers to push the price lower. And the BBWP here is showing a lot of compression. We even have a blue bar, which means we're very compressed and we have a lot of energy to release, very likely towards the downside over the next several weeks. On the weekly chart, we're seeing bullish divergence form on the RSI, which signals that we're likely close to the bottom of the bear market. However, other important indicators haven't fired, like SOFR, or the spent out profit ratio, which is a measure of investor pain. Every bear market, we have seen the max pain scenario where the weak hands are flushed out of the market in a capitulation event, and we still haven't seen that. We do have time for that to occur because on the power law corridor, every bear market bottom has occurred right around the time when this block height marker exists on the chart, and we have quite a gap to close. So over the next several months, according to the weekly chart, we are likely to see further downside and a capitulation event for Bitcoin. On the monthly chart, we still need to see the bull market support band go inside the blue fair value band, as we've seen in every previous bear market. Also, if we look at the MACD, there is no slowing in the momentum. We haven't seen the histogram flip to light red, and so that indicates that our downtrend is still intact, and we will need to see that final capitulation before we actually can bottom out. With all of that in mind, my official prediction for the month of August is that Bitcoin will hover briefly in the current 62K to 64K area before moving lower in the first week of August to the 58K to 60K area. It will then stay in that area until the beginning of the third week of August, when it will begin a counter-trend rally to retest resistance at the 62K area. Following a failed resistance test, it will move lower toward the end of the month into the mid-50s. Invalidation to the upside in the first half of the month is the descending trend line between 65,725 at the start of the month and 63,000 on the 15th. Then 63,000 until the end of the month. Downside invalidation is the descending trend line between 57,750 on the 1st to 53K at the end of the month. You're just going to have to join me next time to find out what happened to Bitcoin and for the September update from Adventure Crypto. That's it for the August update. Remember, not financial advice. If you enjoyed the content, please like and subscribe and join me next time for the September update from Adventure Crypto.